Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading setup, market strategies for the day and of course all the earnings that you need to keep an eye out on. Remember yesterday, which was the weekly expiry day for the Nifty, the index opened slightly on the positive side but began sliding soon after. We did see a choppy session throughout the board and a brief attempt for recovery was also thwarted towards the end of the session as we ended near the day's low point, about 100 points lower in trade. So far for the week, the Nifty is down by 38 points, but is also down for the third week in a row as well. So we'll remain to see as to how the markets will be reacting to the coming earnings as well as what happens on the micro and the macro data front as well. Of course, markets focus will shift on the earnings of Reliance Industries post-market hours today. There will be Hindustan Zinc, JSW Steel, Bandhan Bank, India Mart Intermesh earnings that will also be coming out. Markets will also react to Wipro's earnings that came out yesterday after the market hours. Axis Bank, Jio Financial Services and Indian Hotels as well, that all posted their results after the market hours yesterday. Globally, we've seen that the Wall Street continued to rally. The S&P 500 climbed by about 0.5%, Dow Jones Industrial Average also up by 0.5%, and the Nasdaq Composite advanced by 0.7% in trade. Now, what led to this move was the strong US retail sales and low weekly jobless claims that signaled a solid economy for the United States. Following this, we've continued to see the foreign institutional activity continuing on the negative side for India. FIS net sold shares worth about 3,670 odd crore rupees in the Indian markets as of yesterday. DIIs, they purchased shares worth about 2,717 odd crores. Of course, a mixed trade on the Asian markets and slight positive on the gift nifty is what is being indicated as of now. 4 minutes from now, we will have to see how the pre-open also kickstarts. But let's welcome our guest on board. We have Mr. Abhishek Basu Malik now joining in on the program with us. He's the co-founder and fund manager of Sri Rama Managers to share with us his views on the markets. Good morning to you, Abhishek, and thank you so much for taking the time out. Well, we're in the thick of action, especially the large cap IT numbers that have been coming in. So let's start off with that and then let's look at what's happening around the globe as well. IT earnings, HCL Tech, TCS, Tech Mahindra, LTI, Mindtree, most of them have actually reported slightly muted earnings, slightly lower than estimates as well. Wipro is again talking about they've not decided on the salary hikes, uncertain demand environment continues to defer that. This is a second company after TCS that has reported the same. How would you look at the earnings that have come in from the IT pack so far?
You and all your viewers. See, I think the numbers are as expected. None of us, I think, were expecting great numbers from any one of the IT tech. What is encouraging is that at least for Wipro, the deal wins have been strong. The commentary around
Yes.
mega deals has been strong. And the only thing that we have to sort of see within this is that these are most of these large deals are vendor consolidations, right? So basically, it is taking away the pie from X and being given to Y. So some other Indian large player is losing this, and it is going to somebody else. And this round robin kind of game is playing around across. So net as a IT services industry, I don't think we are gaining much ground. So what somebody is losing, the others are gaining, right? And that is why probably you see that even though there are deal wins which are large, the top line is not growing or is stagnant for most of these people. And I don't see that changing. The bigger challenge with IT today is that the business model of the IT services companies are under strain right now because US corporate sentiment is not that great because of tariffs, etc. They're not certain as to where and how they want to spend, and it is getting added on with the uncertainty surrounding AI, how AI is going to change their business and things like that. So change the business of the end clients as well as change the business of the IT delivery. So all in all, I think we are in the midst of a flux in the IT services industry, and it might take a few quarters for things to get clearer.
Absolutely. So, two very important points that you make is one, the impact of the uncertainty in their biggest playground in the US on the account of tariffs and how the economy is shaping up. So far, the macro data is still comfortable, but what the policy's impact will be on an inflation, on the rate front, and how will the clients be really comfortable to loosen their purse strings when it comes to, giving more contracts and closing deals sooner is something which is a question mark. And AI. That continues to be a big overhang as well. Already we are seeing that Mr. Basu Malik, that in biggest of the tech companies abroad, in Microsoft, Amazon, so much of layoff has already taken place. So much more is in the offing, and largely on account of AI-led intervention that we are seeing. Is that something that would also sooner or later start to trickle in for the Indian companies? Already two large companies are saying they're not sure about salary hikes, hirings are lowering down as well. So how are you looking at the scenario pan out for Indian incumbent players?
See, I think the business model for the Indian IT services companies for the last, I think, 3 decades
Yeah.
has been we hire a lot of junior programmers, and
Yes.
all these companies have a pyramid model, basically meaning that the number of people at the bottom are the highest, and then gradually it sort of tapers as we go to the top of the hierarchy. Now that model itself is getting challenged because now what you need is the more vibe coding and AI assisted coding picks up, the lesser number of programmers you need. So you need more experienced people, more people with domain expertise, more people who are able to design and things and things like that. So the challenge is going to be it's not a IT services only challenge. I mean, that is one part of the problem. The other part of the problem, which I am more concerned about as an Indian, is that IT has been our biggest, high end or high earning job creator for the country.
Correct.
And if what we are seeing today, we are seeing less new hiring, we are seeing uh, salary hike freezes or no salary hikes. Now, that is going to impact the overall sentiment in the consumption within the country, the growth that is fueled by all of the people who are employed in IT. If you see, pretty much the growth of centers like Bangalore and Pune, Gurgaon, Hyderabad has been on the back of the IT industry. Now, if in the next 10, 15, 20 years there is a significant shift to this model, then that is a challenge to to the overall economy of India, and how we are able to replace these high paying jobs in other sectors.
Absolutely. Just briefly to mention, we started on the back foot, but now we are in the green in the pre-open trade, 25,123, just a mild green take of 11 points higher on the Nifty. Of course, we'll be looking at a whole host of stocks there. Let's start off with the IT space itself. Let's look at a Wipro that came out with the mixed quarter, constant currency growth down by 2%, Q2 guidance -1 to +1%. Deals win strong for this one, 3% higher for Wipro in the pre-open trade at 268. LTI Mindtree, another one that reported its numbers, revenue of 9,840 odd crore rupees, up by 0.7% on a sequential basis and 7.6% on a year-on-year basis. Net profit also growing by 11% on a sequential basis, and there you have it, almost a 3% uptick for this one. Let's also look at some of the other key numbers that came in. Axis Bank was another one that came in. Now here, there was some technical impact that has led to a big surge in slippages for the company, and that is what is getting reflected on the stock now, 4.7% lower in trade. The NIMs have also fallen by about basis points sequentially, although the advances growth is about 8% higher. So that's as far as Axis Bank and the reaction to that is concerned. I'll also look at two more numbers and see how the stock is reacting first in the pre-open. Geo Financial Services. Now it reported a consolidated revenue of 612 crores. That apart, the profits also stood at 325 odd crore rupees, up by 4% year on year. We've also seen the pre-provisioning operating profit up by about 8 odd percent on a year-on-year basis to 366 odd crore rupees. And the Jio BlackRock Asset Management Company's AUM has now crossed 17,800 odd crores. You can see about a 1.5% uptick on this one now. Indian hotels from the hospitality space will also be in focus. Here the profit went up 19.5%. Revenue was up by about 31.7% and EBITDA also improved by about 28% as well. So that's as far as the operational picture is concerned on Indian hotels. Just about a mild uptick. So some of those key numbers that you can watch out for when the markets open up. Let's get back to our conversation. Mr. Basu Malik, IT is something that we broadly discussed. Let's discuss some of the other aspects as well. Beyond IT, what is your overall expectation of the overall earnings season this time? Are you keeping any strategies focused on the earnings?
So right now, I think we are pretty much in the very early stages of earnings.
Yes.
What has come through is that there are pockets where earnings have been pretty strong. I think you just mentioned hotels. I think hotels have been doing well. Asset management companies or companies related to the capital markets have done reasonably well. Chemicals, agrochemicals, they're coming out with good numbers. Uh, Realty has come out with decent numbers. So in these pockets, I think whatever numbers have been coming through, they've delivered decent numbers. I think we need to keep monitoring and seeing which areas are doing well. I think it will be the same predictable set which will be delivering good numbers. In addition to these, I think some of the chemical companies will do well. Manufacturing capital goods should do well. And I think uh, banking, financials, etc. Mostly they should be doing coming out with stability.
Okay. Let me come to the banks. One of the largest banks, first ones to report their earnings is Axis Bank today. Of course, tomorrow is a Saturday and we'll see two of the largest banks, HDFC and ICICI, report their numbers tomorrow. So the banking space will clearly be in focus in the next week. Now, beyond IT, it will be banks also, the other heavyweight that will be important. Look at the drop here, 6% of a drop on Axis Bank now in the pre-open as we inch closer to settling that. Of course, here most of the brokerage houses are now looking to downgrade the stock to hold, but none of them still have a sell here. Remember that. Now, Nuvama has a hold rating. It's brought it down from buy rating. The target price is at 1180 vis-a-vis the earlier target of 1400. The other brokerage house is JP Morgan, which has also downgraded Axis Bank to neutral now from overweight rating earlier. The slashing of the target price has come down to 1265 from 1315 earlier. Nuvama writes in that NIMs have fallen sequentially even when the lender has been slowest in passing the RBI rate cuts to its customers. And that's one concern for them. They have cut their EPS estimates for FY26 and for FY27. So also JP Morgan has done the same. Let's understand from you, Mr. Basu Malik, on Axis Bank. What have you read through in the numbers? What would that indicate for the rest of the banking names? Remember that banking space has been the showstopper for the markets in the kind of recovery in the rally that we've seen from the lows that were caused in April because of tariff talk all the way up to now when we are back above 25,000 levels. But now all will depend on whether fundamentals are continuing to be in tandem with the stock price momentum.
So I think, see, the first of all on Axis, I think the miss on the profit levels was primarily due to the slippage recognition that they had done, right, and the provisioning. So as such, I think the bigger challenge or concern is the loan growth. I think for Axis, the loan growth has been slightly below average. Even the industry average, I think they're below the industry average, which is what is slightly concerning. And I think between that and CASA growth, again, which has been pretty tepid, I think that is why the market, is concerned with the results. It's not so much just the this quarter's numbers, but the fact that they are not able to grow, they are not able to build up on their CASA is, I think, what is spooking the markets right now.
Okay, got that. So that's Axis Bank for you. Any expectation on HDFC and ICI, sir? What exactly could we expect there?
I mean, I'm not expecting great or blockbuster results from any one of these banks. I think they are in this phase. I mean, so the results should continue to improve over the next 2 3 quarters. Uh, the rate cuts should take effect. So it's not a 1 quarter game that we are seeing for these banks or NBFCs, etc. So we have to give them some time for the overall economy to pick up.
Okay, so there could be, not very blockbuster results, but just in line is what we are expecting right now. Let's look at the markets which have settled in the pre-open. Absolutely flat at 25,108, just with a minor 0.01% of a dip. IT sector continues to be in the limelight. It could be opening higher by about 0.6%. Real estate, oil and gas, autos, consumer durables, metals, FMCG could be in focus. Banks, however, could be on the back foot. You can see the private banks that could be lagging 1% lower. Nifty Bank overall half odd percent lower, led also by the losses in financial services. But PSU banks could again be showing us some bucking of the trend within this pack. Wipro seems to be topping the Nifty today with 3% uptick. Geo Financial Services, Shriram Finance, Tech Mahindra, TCS and JSW Steel as among those top movers, whereas Axis Bank could be the top laggard as we open today in about 4 minutes from now. Bharti Airtel, Bajaj Auto, Bajaj Finance, some of the other laggards that could be seen as well. Let's talk about the biggest stock with the market cap, Reliance Industries, that comes out with the earnings today, and that will be the one that the markets will be watching out for very, very keenly on Monday as the markets open. Overall, from the kind of estimates that we have from various analysts, it believes that Reliance revenues overall for the quarter are estimated to surge about 3% sequentially to over 30,900 odd crore rupees, and the EBITDA is projected to be somewhere around 16,600 odd crore rupees. That would also be an improvement from 16,188 odd crore rupees from the previous year same quarter. EBITDA margins are expected to remain broadly stable at around 53-54% or slightly lower than the last time, 53.9%, although profit after tax is likely to climb by about 5 odd percent, is most of the average estimates of the street say, at around 6,675 odd crore rupees. But what would be important to see is how some of the newer businesses, Reliance Jio, Reliance Retail, will perform vis-a-vis the traditional business of petchem, refining, oil and gas. Sir, let's understand from you, what are you watching out for from this earnings that will be coming in? What will be key for the shareholders and the markets to watch out for here?
So I think Reliance for the last few months have been performing really well. I mean, Reliance's stock, right? After many years, we're seeing a significant strength in the stock. Uh, I think as a company, Reliance is pivoting to a more consumer-facing business. Previously, it was all industrial, oil and gas, refining, etc. Now, it's slowly pivoting to a company which is focused on retail. It's focused on building out its products business, and so again, this is a business in transition. uh, they've they've got a foothold into many new areas, whether it is the hydrogen energy, whether it is a lot of interesting spaces. They've sort of seeded the plants, and it might take a while, and it's large businesses or large cash flow companies like Reliance who can do it. They can plant many seeds and wait for things to play out. And even if a few out of the many seeds actually end up becoming large trees, it's good for the overall business. So I think what for Reliance kind of businesses, for me, who I'm not an investor in Reliance. For me, Reliance is a kind of a temperature check on how multiple areas within the Indian economy is doing. So that is what sort of gives me. So, for example, like HDFC Bank or SBI numbers and their commentary gives you an indication of how the country is actually doing. Similarly, Reliance gives you an indication of how the core economy is doing.
How the core economy is doing. It is a reflection of what's happening on the broad economy in the country. Um, when we talk about the kind of expectation that we have, everybody is just waiting to watch out for if there could be any indication of yes, this could be the year, or at least any timeline where there could be some demergers that could take place and separate listing of these newer businesses like a Geo or a retail separately. Any key announcements on, like you pointed out, the new energy businesses? That's something the markets will actually be keeping their key eyes on, because that might just give an indication of what the next course of action on the stock price could be. Are you hoping for any indication on that this quarter, or will there be still some more wait that we will have to do?
Absolutely not possible to figure out when that will have happen, but for sure it will happen, because this looks like a very long term planning in terms of planning Mr. Mukesh Ambani's legacy, right? So uh, splitting up the company, or creating separate companies for for his children, probably to manage separately, because I think the market sentiment, or the understanding is that the acrimonious separation that happened with him and his brother, I would presume that that would not want to be repeated. So uh, it is probably going to happen. When it will happen is it's very difficult to say.
Okay. Markets have started to tick, so let's look at the markets and we'll come back to our conversation. 25,105 right now. It's a volatile start for the Nifty. IT stocks, although half odd percent higher, followed by metals, realty, and auto that are also showing us some signs of pickup. But what's down? Private banks, over a percent drag, of course, led by Axis Bank and the decline in the stock price of that following the earnings. PSU banks are also lower, financial services lower, FMCG, oil and gas are also lower, and the broader markets are also flat with a negative bias right now on the small and the mid cap basket. So the metals, IT, these are the two pockets that are still holding about half odd percent higher. Top movers on the Nifty are Wipro again, 3.2% higher, 269 post earnings coming in. Geo Financial Services also cheering. The earnings 321 right now, over a percent higher. Tata Steel about 1% up. JSW Steel, M&M. These are the top movers. Axis Bank down by 5% at 1,100 odd levels. Then look at Bharti Airtel, State Bank of India, Kotak Mahindra Bank, about half odd percent losses for these. In the F&O space as well, it's Wipro that's shining bright. L&T Finance, Polycaba, some of the other stocks that follow. The rest of the names that are actually correcting are Axis Bank in the F&O space, LTI Mindtree. You also have BPCL that's also declining. But let's welcome even Kunal V. Parar, who's joining in, Vice President of Technical Research at Choice Equity Broking, to share with us his views on the technicals on the markets. Kunal, how do you see the opening? We've had, a very, very choppy, range-bound kind of a week so far. How would you see the markets play up now?
Good morning. And if you talk about market right now, trading at 25,090, down by 25 points, and I'm seeing the further downside momentum from the recent level. Since last 1 to 2 week, Nifty has been trading below its 20 50 days moving average on an early chart. Now this clearly indicates that the further downside momentum would be there in the index up to the level of 25,000, and if Nifty breaks this level, then further downside would be there up to the level of 24,800. So it's a clear sign that the further downside, further pain would be there from the present level. So no clear-cut upside momentum until and unless Nifty sustain above 25,300. So it would be like a sell on high opportunities that we might get if Nifty rise up to the level of 25,200, 25,250 with a strict stop loss of 25,300. And from the present level, 25,000 would be our first target. And if it breaks, then 24,800 would be there.
Okay, what about two stock ideas that you would like to give right at the market opening? What should investors carry for the day?
Well, right now I'm just keeping myself aside for giving any stock because I'm not seeing any particular counter where spark is there. I'm not getting that much of confidence to give
Hmm.
any clear ideas. I'll wait
Okay.
for 15 to 20 minutes further to settle down this volatility, and afterwards I'll try to give.
Sure. Okay. So next 15 minutes, let the markets just find themselves in some direction, and then Kunal will be sharing with us, the views on the stocks. 11.3 for India VIX. It's again ticking higher. Defense names are actually after a long haul also picking up pace. Let's understand from Mr. Basu Malik, defense names. How are you looking at that space? Do you think enough and more good news is already in the price for most of these stocks right now? Will they enter again into a long haul consolidation, or is it still okay to continue building up positions here?
So, we discussed last week. I
Yeah.
think defense is a long-term thing, definitely a long-term thing, because what we are seeing is significant investments coming in across the world, across countries, especially Europe, China, India. All countries are shoring up their own defenses. Having said that, uh, the rally that we've seen in the Indian defense companies has been very sharp, and I think that we are already in a couple of weeks of consolidation. This might continue for some more time. It could be a few more weeks, or it could be a few more months, where we probably go sideways, maybe with a slightly downward bias, and then as and when the numbers keep continuing to be good, uh, the stocks will start performing again. But uh, from now on, I think the growth is it's more likely to be compounders than explosive growth in stock prices in the defense space is what I feel.
Okay, defense stocks could be compounders rather than explosive moves that can be seen here right now. We'll take that. Let's look at some of the other stocks. Okay, from the auto space and the auto ancillary space, we'll now focus a little bit. Let's start off with the auto ancillary pack. Samvardhan Motherson is in focus today. Now, a lot of you viewers must be wondering why there is this 33% of a downtick today. No, this is not a 33% downtick. This is adjustment for the bonus issue of shares. In fact, the company had already announced a 1:2 bonus issue along with its fourth quarter earnings in May this year. And this means that shareholders who had held the shares of the company as of Thursday's close will be eligible to receive one bonus share for every two that they own of Samvardhan Motherson. So in case if you had 100 shares of Samvardhan, you will receive 50 shares as bonus, taking the total count to 150 shares. That's the math that you will have to look for yourself as to what are the number of shares that you now hold on this company. And that's how the stock price has really adjusted. So it's not a dip right now. Let's understand from both Mr. Basumalik, you and from Kunal, how are you looking at Samvardhan Motherson post the bonus issue? Now, this has been one of the key favorite stocks of a lot of analysts and even retail investors in the auto ancillary basket from last couple of years. How are you looking at it?
So, first of all, disclaimer: I hold this in my fund. It's been a favorite of mine for a while. I think they've been doing phenomenal business, phenomenal work across the world, setting up plants, catering to some of the best automobile companies in the world, and the focus uh, continues to be on growth, on profitable growth. So I think it's a very good business and a good compounder to hold for across cycles.
Okay. If I have to ask you, Mr. Basu Malik, between Samvardhan and Sona BLW, how are you looking at the opportunities there? Yesterday, we saw a sharp spike in Sona BLW with expanded partnerships with the Chinese
BYD.
BYD player as well. So, both are in the same game. How does one really decide?
So there are, if you look at the Indian auto ancillary space, I think there are roughly about 70, 80 companies. And a lot of companies have overlapping products. So it's a question of, the the products, the question of the client set, the question of the compound. I mean, the quality of management, the growth prospects in the specific products. So Sona BLW is also doing some really good work. So it's not one versus the other. It's just a question of, as an investor, where you are more comfortable. If you're more comfortable with one company, you might buy that versus the other. We've been holding Motherson for a while. Doesn't mean that we cannot sell it tomorrow and switch to something else. But that's the way it is. And just to say that Sona, and there are a number of other companies which are doing really good, really good work in the organic space.
Okay, Kunal, what about you? Technically, which one is better placed between the two as far as the charts are concerned?
Well, both stocks looks very attractive on a daily chart. Let's talk on the Sona BLW first. Yesterday we saw a magnificent momentum. Stock up by 7%. Give a closing at 486. Now, if stock sustain above 495, right now stock is trading at 483. If stock sustain above 495, then one way rally would be there up to the level of 555, and more above would be up to the level of 600 level. So. It would be conditional buy if stock sustainable for 495, then only one should get into the stock. And if you talk about the Motherson Sumi, then the way stock has been trading on its daily chart, right now stock is trading at 103. I think this is the perfect time to get into stock, because after adjusting this corporate action, I think right now stock is trading above its 200 days moving average, 100 days moving average. Not only this, from the present level, we may see some spot up to the level of 109. Now, let's say if stocks is still above 109, then one way rally would be there up to the level of 140. So, clear cut momentum would be there on northward side. So, this is the perfect time to get into the stock at somewhere the Motherson should be with strict stop loss of 99.
Okay, got that. So that's the auto ancillary name that we can definitely look at this point. What's also buzzing in the markets right now is the metals pack, clearly 0.7% higher in trade. Let me just delve a little deeper and find out from the metals basket what else is buzzing. Jindal Stainless, NMDC, Steel Authority, Tata Steel, JSW Steel, all of them are up and about. Mr. Basu Malik, metals for you, do they excite you at this point or no?
I don't understand metals enough to make it exciting for me.
Okay. Technically, do you think this is getting in a better zone, Kunal, metal space? Any key stock that you will be going with?
Well, if you talk about metal stock, metal counter, right now the way Nifty Metal has been trading on a daily chart, I think
Yeah.
a good momentum would be there. I think one should focus on NMDC, Tata Steel, Jindal Steel, Jindal Steel, and particularly on the NMDC, the way stock has been trading on its daily chart. Further upside would be there on this counter. Right now, NMDC is trading at 70.74. It has been trading above its 200 days moving average. And not only this, stock also has formed its bottom formation on a daily chart. So right now, NMDC is trading at 70.80. I think this is the perfect time to get into the stock with strict stop loss of 66. Now, if you talk about upper side target, then first target comes at 75, and if stock breaks this level, then one way rally would be there up to the level of 83. So risk reward is in favor for creating a long position only. NMDC, I think one should focus. And yes, I think you were talking about Nalco National Aluminium right now trading at 189. Now, I'm not seeing any particular direction in this counter, because since last many days, stock has been trading in a range bound momentum only, and it is trading below its 200 days moving average. So, I'm not seeing any clear cut direction in this counter. So, one should avoid this counter as of now and should shift their focus on NMDC.
Okay. I'll actually come to the travel hospitality space. And Mr. Basu Malik, I wanted to take a view there. Between the hotel stocks, how are you looking at some of the opportunities that present post the earnings? ITC Hotels came out with the earnings. Now, Indian Hotels also has come out with the earnings there. What have been the early indications there? We'll be, of course, waiting by for Leela Hotels to come up. But hospitality space, what's your top choice there, and how are you looking at the opportunities?
The, uh, the way the prices of hotels are, it's not a wonder that the results are good. It,
Yes.
uh, it, and I don't see. I mean, initially after the COVID, pandemic, a lot of us thought that this is going to be temporary. It's more of revenge travel. But nowadays, I feel that that has become part of our, part of the lifestyle of people. That small breaks, holidays, people are just traveling. Indian traveling has just sort of completely leapfrogged, and I don't see hotels not doing well at least for a few years. Now, whether the high end, top end hotels do really well, or the mid tier hotels do better, that is a question that remains to be seen. But as a sector, this is a sector which is definitely booming.
Sector that's definitely booming. Any key stocks that you are watching out for, sir, here?
Not really, because we're not, invested in any hotel stock as of now. I think the valuations are not in our favor. So incremental earnings or incremental returns might be slightly subdued, but the businesses will continue to do well. We have to be on the lookout for, times when we can get some of these at a slightly better valuation.
Okay, fair point. All right, Mr. Basmalik, we have to thank you then for being with us on the program today and to share with us all your views across the markets and various segments. All the best, and thank you so
Thank you.
much for taking the time out. All right, viewers will continue.